Hey guys, so in this video, let's talk about trading, using technical analysis, and how you get to implement this in the crypto market. So, as you all know, my background, I've been pretty much a stock market investor all my life. I've been using technical analysis in the stock market, and what I learned from the stock market somehow no, allows me to be able to use all of the principles that I had in the stock market and superimpose that into the cryptocurrency market. Although there are bits and pieces also of differences, the crypto market is more volatile. The crypto market is relatively 24/7 as compared to the stock market, depending on what market you are trading. Somehow the trading hours are shorter, and somehow also there are gaps in between that could cause markets to pump also when it starts to open. Then you would see also breakdowns depending on what the disclosure is when the markets are actually closed as well. But other than that, I still believe this, that technical analysis is a good way for investors to be able to get a sense of where buyers and sellers are. Technical analysis is a good way also for investors to be able to at least see either the trend, see areas where people are buying, see areas where people are selling, or where they actually think it's actually expensive. Please do remember this, that technical analysis is not a crystal ball. Technical analysis is not a forecasting tool. Technical analysis, that people always think that when you use technicals that it will cause you not to have any losses in the market, regardless if it's stocks or crypto. That's not true. Anytime you start investing, anytime you come into the markets, uh, losses are always part of the game. It's not about you playing a perfect game. It's about you following your plan, being disciplined, and also being consistent with it. That if sell signals emerge, regardless if it's a loss or a profit, that you actually do so and sell that position. In the same way, when buy signals emerge based on technical parameters that you're actually using, then the name of the game, the narrative also is to come in, position, and actually start buying based on the parameters that you use. And here's the thing. There are certain set of principles in technical analysis, but what's so interesting about that is it's so subjective that you can be looking at one chart. I could be looking at the same chart, and another third person could be looking at the same chart, but we will have different analysis of it. And it speaks also to where our background is. Our biases are also towards a particular token, coin, or project. And in the same way also, it goes to show us also more of our time horizon. So when people are saying there's no buy signal yet when you're looking at the chart, but for you there's already a buy signal, it may mean that maybe your time horizon is shorter than them, or maybe your time horizon is longer than them, and that's where the delta is in terms of the differences on how people are looking at it from a technical analysis point of view. So please do note that we may be looking at the same chart, but because there's so much intangibles as part of how a chart is analyzed, we will all come up with different buy and sell signals as well. And what's interesting about that, though, is that as long as it's rooted on the proper framework of what technical analysis is, I think it should be generally okay, as long as it's rooted in the proper principles and you stick to the buy and sell signals that you have crafted. Because you will lose money, and it will not give you conviction, and it will not help you develop your own system if at the middle of the game you start changing your rules, or you start selling just because you're having a gain, or you start selling just because you're fearful of generating a larger amount of loss. It has to be the sell signal or the buy signal should be predicated on what the charts are telling you. Now, that being said, allow me to zoom in and show you a larger piece of the chart. So, what I've been normally using, pretty much also because of my stock market background, is I use daily candlesticks. But please do note also, as I start using daily candlesticks, it's if I want to get a smaller time frame, or I want to see more price action within the day, then I zoom in from an hour or to 15 minutes. But please do remember this, that when you're looking at shorter time frames, it also shows you something that's relatively weaker. If you're looking at longer time frames, it's relatively stronger. The difference, though, if it's shorter, it gives you more false signals. It actually means that you may have to transact more, and part of you also transacting more may generate either more buying or selling in your end, and also could probably lead to also more losses if those signals are very very quick as well. And in the same way, the longer ones, they will not have as much false signals, but the pitfall of that also is it may cause you to buy at a much later point. it may cost you to buy higher, and when you're selling also, it may cost you also to sell lower. So there's nothing wrong with also getting a longer time frame, but you have to realize that there are pros and cons to getting it. Shorter time frames, more false signals. Shorter time frames, there may also be the ability that, okay, the time frame is relatively shorter, I must react quickly, and because of that you may buy and sell on a more regular and frequent basis. And part and parcel of that also, you must also take into consideration your time frame. You also, when I said sorry, your the time that you have to be able to watch the crypto that you're actually watching and starting to analyze as well. So it could be at least 15 minutes, an hour chart, or it could be daily charts. It's up to your prerogative, or you can also zoom out to weekly or monthly charts as well. But because my bias is from the stock market, I always start with daily candlesticks, then I try to zoom in if needed, or I try to zoom out also as needed as well. As you can see here also in the chart, we're looking at Bitcoin, and I'm trying to make this also somewhat evergreen, in a way that if even if you watch this video a year from now, the principles will still stand. And what you have here also in the charts, if you try to look at it very well, is I have moving averages here, and I also have RSI and MACD. But my general standard when I start analyzing stocks or crypto is basically I look at it from a support and resistance level first. Then I start looking at the general trend. Then I start looking at other indicators as needed. And if you'll allow me to zoom out here, it's quite clear from this point of view. And I don't know if you see it very well, this is a downward trending slope that started at the peak, at least when the markets started, or at least Bitcoin hit at least 69,000 last year. It had a very long downtrend, as you can see right here. Not long, but from November to Feb 2022. So that was about 3 months of a downward trending slope for Bitcoin as well. And for those who have attended my Stock Smart sessions, or at least read my books, what I always say is that a trend remains intact until it bends, or until that particular trend is broken, and then you see a change in direction. And as you can see right here, somewhere around this area, the entire downward trending slope for Bitcoin was broken, and it brought about a new trend for Bitcoin as a whole. So from February, somewhere around here, Feb 2022, to where we are today, somewhere around 2 months, it's neither breaking out, it's neither breaking down, and a general consensus that we could currently concoct um, based on the trend that where we are right now, it's generally moving sideways. No massive breakouts, no massive breakdowns, and you have a distinct resistance level here. And the resistance that I'm trying to use right here is the 200-day moving average. Again, the 200-day moving average is longer, and the longer it is, the stronger it is, and the stronger it is also. Two things could possibly happen. A breakout from that can make it a longer and stronger support level, or it can make it also a longer and stronger breakout. However, failure to break out from that particular resistance level may cause the stock or crypto that you're actually analyzing to receive a bit more of downside, because there's heavy selling that's going on there. So what's very evident from this level is that since it tried to attack this particular resistance level from March 27 to around the first week of April, it had not broken out from that. It was not successful, and then we started to see it start to go lower. And if you see it right here, this entire sideways movement, this entire range that we are on, also was predicated from the breakdown of the 200-day moving average, which started somewhere around December 28, 2021. So if you look at it from at least the breakdown of the 200-day moving average, we have been below the 200-day moving average for somewhere around 4 months already, and that's dictating the trajectory. That's dictating where Bitcoin and maybe the crypto market as a whole could be as well. So from a purely technical analysis point of view, one of the reasons why we really haven't seen the market at least pull up is since it broke down from December 28, 2021 to where we are today. It tried to attack it end of March and some parts of early April. It has not gone above the 200-day moving average. And that being said, our main support line right here, this is something that I'm trying to use something that's a bit hybrid. I'm using the moving average as a resistance, and this is a support level that I drew by my own, and it's basically coming from this. This was the area where it hit this particular price point somewhere around January 2022, and it never went below that particular price point. It hit this on an intraday level somewhere at the end of somewhere Feb 23. And please do note, this was predicated by all of the action that's been going on in Russia and Ukraine. It hit that level intraday. As it hit that, it started to bounce once again. So our main support, at least for this particular sideways trajectory, is at 34756. Our main resistance right now for this entire range is a 200-day moving average at 48136. So for those who want to possibly somehow just trade the range and you want to be patient also if it will actually go back to this level, then wait for it 34,840. If it hits that level, stays above that level, then that could be a possible area for you to somehow start to pick it up. That could be an area for you also that if it bounces from this particular level, hits the 34,840 level, that's an area to buy. Target prices would be here 44,791, which is also close to where the 25-day moving average is. And also here, the 200-day moving average somewhere around the 48,136 mark. So looking at it here, a couple of things that I've mentioned already. We've broken out from the downward trajectory that started November 2021. We're still currently sideways. Main resistance to watch out for is somewhere here, 48,328. Support level here, somewhere around the 34,446 level. So that's where we are from a support and resistance level. Another thing to note also from a purely technical analysis point of view is if you try to analyze it from looking at the other moving averages that are attached to it, you have the 25-day moving average and you also have the 7-day moving average, all of which are, if you look at it from pro- pro- connecting it to the candlestick, the candlestick is below the moving average, and the more the moving averages are bearish, the more confirmation you have that this will all be resistances, and it could also lead to a harder time for the candlestick or Bitcoin or whatever you're analyzing to actually push up. So here are the resistance levels that it must break. It must go above the 7-day moving average. It must go back above here 43,726 or the 44,000 level, and then ultimately the longer the stronger one, which is the 200-day moving average. Now RSI, if you can see also, I normally use RSI when there's massive downward shifts or there's a lot of when you try to look at it, there's a lot of irrationality, either massive buying, which causes the market to push up, then massive selling, which causes the market to push lower. And if you see it right here, the moment it hit the resistance level, it was very, very close also here, which as a lot of people are actually thinking or looking at also when it hits overbought levels and it starts to cross down, that becomes an area also to take profit, and which also coincides right here to the cross down that we have on the MACD. Now, that being said, I want to show you this. So there was a sell down also that happened after the failure to break out from the 200-day moving average. We started to see it go down. Then we started to see the RSI start to pull up right now. So look, judging from where we are today, or at least looking at the RSI, it price points have the price current price of Bitcoin has started to stabilize a bit. We're not seeing it anymore in oversold levels. However, I just want to mention this, that MACD right now, the change in direction here that happened somewhere around April 5, which led to this downward movement. So please do note this. The change in direction that happened in MACD that was telling us that, hey, from it actually trying to push up, we're now seeing another movement or a change in direction. Some of the signals to look at was the failure to break out the 200-day moving average, breakdown, which also led to the breakdown of the 7 and 25-day moving average, which happened during a large red candle. But this entire change of direction, it hasn't been it hasn't shown us yet a new shift or a new change. So whatever this is, it's still currently intact. But while all of that is also going on, we're seeing MACD below the zero line. So for those who are new to technical analysis, the zero line cross in MACD is something that a lot of investors and traders also look at. That if it stays above the zero lane, given that there might be corrections, there might be sell downs, there might be red candles, but as long as it stays above the zero line cross, it shows you a more bullish undertone. But if it goes and crosses below the zero line crossing and you have the lines below the zero line area, it's denoting and showing you that there might be more bearish movement still here. But if you want to analyze it further, it still has some merit in a way that it's still not yet back at the support level that we've considered as the main area of support. So if there's some downside here, and at least judging it from the main sideways channel that it is currently on, which we saw it started somewhere around February 2022, the possible downside move is still here from the 40,000 level all the way to the 34,000 level. So should selling continue, which MACD is currently showing us that it's more bearish, which moving average are also showing us that it's more bearish. The current downside target or the downward movement could possibly bring it to around 34,900 area. However, should it bounce, should it push up, resistances to consider, to watch out for is the 25-day moving average, which is around 43,727, or the 44,791 mark, which is the nearest and closest resistance. So please do remember this. The only chance that it goes to the 200-day moving average again is when it actually breaks out from the 25-day moving average or the 200-day moving average as well. So just to put everything, just to recap everything, we're currently consolidating. We're in a sideways move, which, if you try to look at it, was predicated from the breakout, or at least the breakage of the downward trending slope that happened a couple of months ago. So we're sideways. Main resistance to watch out for 200-day moving average. Main support to watch out for 34,840 level. So I'll give you another update. Should there be sudden movements in this, or should there be any changes, meaning it goes back to the support or it breaks out from a significant resistance. But please do note this: the main goal here is not just to give you a sense of where it's actually going, but to show you the principles, and at least to show you how I would analyze things, how I would look at charts. Because at the end of the day, what I want you to get is not to memorize how I actually do it, or not to look at is there a buy signal today or is there no buy signal today, but to look at the principles behind it so you can replicate it. Because when you can replicate it, that's what makes it relatively powerful, that when you get to analyze and do it on your own, that's stronger. And for me, it's not about you trying. I'm not here to give you fish. I'm here to teach you how to fish, because when you know how to do it on your own, you don't actually need me. But that gives you conviction, but that gives you also the ability to be able to analyze and do things on your own. And in my opinion, that's what makes a difference in the world of trading and investing, is that you listen to your own analysis founded on the right principles, and then you execute off of that. I hope you guys get a lot from this. If you want more about technical analysis, I've written books about it in the description below. And I also have a webinar about it, which you can watch via Zoom on demand. Everything is in the description below. If you want to start investing in the crypto markets, we have crypto exchanges that you can also check out. So that's it for now. I hope that this was something that was insightful for all of you. This is Marvin Germo. If you guys have any questions, put them down below. If you guys have any other cryptos also that you guys want me to analyze, put them down below as well. And we'll try to make more videos about that. And that's it for now. Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.